All right, hello and welcome to the Happy Homebuyer. Today we're doing a quick flyover on a loan program that might be better for you than FHA. Thanks to Mickey Breen here from QLMS, one of our mortgage partners. So I'm excited about this. It's something that you actually introduced to me here just a couple of weeks ago, and I've been meaning to go through and read all the details and figure it all out, but I just figured if I invite you on the show, then we'll learn all that we need to know and we'll share it over here with the Happy Homebuyers here. Can you give me like the 30,000 foot view? Like, who is this program for? Who benefits from this?
Well, the idea of the Home Possible program from Freddie Mac is that it serves the underserved areas.
Okay.
Now, the great thing about that, and we'll talk about this in a minute, is underserved has a broadened definition recently. But the overall idea is it gets someone into an affordable home at a lower rate and at a lower mortgage insurance than it might be available through a cousin product like FHA.
FHA, and so that's what I'm programmed to look at. Like if somebody's looking in a certain price range or they don't have the larger down payment that typically comes with a conventional loan, I'm usually having them look at FHA. And now that I'm reading through all the Home Possible pieces, it looks like they could go all the way down to a 3% down payment, and if they fit the box just perfectly, like they have a 680 plus FICO and their income meets the income guidelines that are there, they could potentially put less money down and end up with a better effective rate potentially than the FHA cousin, and that's the whole goal of it.
Right. Well, like we've been discussing, there are a couple of myths versus facts that we should probably cover. One of the biggest myths with Home Possible is that you can't be a first-time home buyer.
Okay.
And that's just not true. With its cousin, another cousin product, the Fannie Mae Home Ready product, you must be a first-time home buyer, and there's a whole definition for that. But with the Freddie Mac Home Possible, you only can't own another property when you acquire this loan. So in other words, you could be living in a property, sell it simultaneously, and get a new home with Home Possible. The Freddie Mac Home Possible allows for that.
That makes sense. But we can use it for our typical buyer who's selling this home to get into that home. It's something that we could use for them if they fit the box just perfectly.
Absolutely. So that's the first myth. I think another myth is area median income. Most people I find, even most loan officers I talk to, believe that most of their borrowers are too wealthy to fit this product, and that's not the case. So area median income is, of course, in an area like Maricopa County, half of the incomes are above it, half of the incomes are below it. It's $66,200 for this county. So if your income is below that, you can qualify for this affordable mortgage program that Freddie Mac allows. If Freddie Mac has recent rule changes where they'll allow you to ignore certain parts of income for area median income purposes without taking someone off the loan.
Which makes sense because there's things that we got to do all the time. Like if somebody just started getting bonus income in the last 2 months, we're not going to count that anyway. It's not a qualifying income. So what other myths are there?
Well, so you're the loan officer in a case like this. So let me ask you questions about payment and rate and effective rate. So another myth is that the rate is going to be higher on a conventional loan, all else equal, than it is on a FHA loan.
Okay.
And why is that not true?
It's
the effective rate.
So when we talk about effective rate, we're talking your interest rate plus your mortgage insurance premium or your annual mortgage insurance premium. We add those things together and you're going to get your effective rate. And that's how I usually sell FHA over conventional or vice versa when we run these things. But there's the other side of that myth too, because conventional insurance, we can take that off once they hit 78% or 80% equity in the property, which when I have that conversation with FHA buyers, I let them know. That mortgage insurance is permanent until we can refinance you into a conventional loan. So,
well, I think it's big news for realtors because what I've learned from partners like you is that the realtors will focus on the things that they know, and they know FHA and they know Fannie Mae's Home Ready. I think this is a well-kept secret. It's a great alternative to Home Ready. In fact, there isn't anything better about Home Ready compared to Home Possible. Home Possible is a better product.
It's just the winner across the board.
Exactly. So I'd encourage the realtors to get with you to learn the details because let's not just assume that it's going to be Fannie Mae or FHA. This offers a lot more opportunity.
And to be super duper clear, this doesn't work for the super high end because we've got income limits. So if you're buying a $4, $5, $6, $7 million plus house, this is not going to work well for you. Also, like everything else, credit scores are going to impact how much this loan costs you, like every other loan there is. If you got over like a 680, this loan's going to be a really, really good fit for you. Under a 680, we're going to be looking at all the options that are there for you and just trying to find the least expensive.
Including FHA.
Including FHA.
Yeah, when you get into those lower scores, FHA might be the right product.
Yeah, exactly there. So no, that makes sense. Thanks a ton for coming on and filling me in on this so that we can fill these folks in on there. Do you think we missed anything? I think we got all the points.
I think we did a nice flyover. I would get with you for the details.
Perfect. Well, that's what we're here for. Thanks, Mickey, for coming in. If you guys have absolutely any questions, give me a call, 480-744-6040, and we'll talk to you next time.